Good morning. We meet once again. Today is a very important day. We're going to start the election in the US. Today is the 4th of November, 2024, and we're going to have a lot of volatility. So please, from the beginning of this podcast, we tell you, be careful. This volatility might hurt your account, and you need to have the proper risk management, especially in this week. Nour, we've noticed that starting last week or maybe 10 days ago, the market has been pricing that Trump is going to win the election by the strength of the dollar. The gold has been going up and all that movement in the market. So do we still have the same odds? That's one, because I've noticed that the dollar index bounced back from the 104.7 or something around that, all the way to 103.7. So is there a reason related to that, or this is just related to the resistance of the dollar index? Plus, we've noticed that the week started with a positive indices. So Dow Jones, S&P, and Nasdaq, they started positive this week after the couple of days that were negative. We are reaching the support line and the trend up for those indices.
There's multiple factors here. First of all, we had the U.S. jobs report on Friday, which basically came in weaker than expected from one side, considering how many jobs were added, only just about like 100,000 or less than that. But at the same time, on the other hand, the unemployment rate remained stable. And the BSL basically said that even despite the bad weather or the hurricanes that the U.S. experienced, it is still hard to determine how this basically had an impact on the unemployment rate, and it's likely to have a little bit, maybe more time to determine that. So basically, the market took it as this is still another slowing down or continuous slowing down in the U.S. Jobs market, and this will lead the Federal Reserve to continue with its rate cut. On the other hand, also during the weekend, there was an update of the national polls in the U.S. which showed that Kamala Harris is basically the race now is very tight, and they're very tied together. So the markets basically went from all the way Trump trade into basically, there is a possibility for any kind of surprises. And this is, you remember what we talked about last week, is that the idea of everybody's thinking that Donald Trump is already in the White House, this basically some sort of an overreaction or even maybe over expectations, just like how we saw back in the days in 2016 or even during Brexit. So now markets are basically trying to go back to earth, if that's the right way to say it, that there's a possibility for Kamala Harris to win this election. In addition to that, the data that we saw from the U.S. So I think this week is going to be very volatile, depending on the exit polls that we're going to see in the next few hours. Especially, it starts on Tuesday. So I would say traders needs to be very careful. You need to have your risk management very, very tight, because we don't know. Nobody knows basically how this election will turn out. There's a lot of it might not be even announced, or the results will be.
Possibilities are open. Basically, there's multiple scenarios.
There's multiple scenarios, and we might not even get results on Tuesday. Usually we have to, but it looks like, according to this, or according to multiple sources and multiple also news outlets, they are expecting the elections to take a few more days until they actually announce who's the winner.
And the fear is if it's going to continue a little bit more than that, maybe till Christmas, or how it's going to be. So now let's move to the oil. We've noticed that oil as well has been supported from the levels of, let's say WTI has been supported from 66, and now we're trading around 71-ish or something like that. So same for Brent. That was supported like the start of that happened when Trump had the interview, and then we've seen gold going up, we've seen oil bouncing back up, and we have the geopolitical tension, of course. But there's a main factor for that move as well, which is related to OPEC. Can you tell us a little bit about that? What happened exactly?
Over the weekend, also OPEC Plus decided to delay their planned output increase for another month. And this is basically, it's been going on for about like a few months now. Since September of this year, they've been trying to say that, okay, we will go back and start increasing our output. And then they they cut back because of what happened in Libya, and then they decided to go with it. Finally, the final decision was released yesterday, OPEC Plus, that they will basically delay it for 1 more month, meaning it's not going to happen until at least until the beginning of next year. This could be one of the tools of OPEC Plus to basically set a floor or a price floor for oil above $70 when it comes to Brent, at least. On the other hand, we should not also forget about the escalation that might happen this week or maybe in the next few weeks, who knows. But Iran basically said they are preparing a retaliation, and it's going to be different time. So oil is basically getting some support from political tensions from one side, OPEC Plus on the other side. So that's a double factor that is basically helping oil. And on the other hand, the decline in the US dollar that we saw over the week, not over the weekend, from the weekend until the beginning of the Asian session today, that also played down the role. But again, it's going to be a very volatile week. We don't know what's going to happen, whether the geopolitical tensions from one side, the US election from another side too.
Could it be like OPEC now are pricing a little bit more better growth as well? Like, could it be related to that as well?
I mean, delaying outputs increase usually is not related to. This means that there is a possibility of, there is no change in the demand on this side.
That's the
because,
idea.
Yeah, because if there was a strong demand or higher demand, this basically would tell us that there is no inventories as being basically going down, but that's not the case. Inventories has been growing recently, so I don't think so that they are pricing in higher growth or stronger growth. But at the same time, don't forget the stimulus packages that China has announced recently. But it will take a little bit more time until we see some sort of an effect on oil demand going forward.
Okay, in 1 minute, we've noticed that euro bounced back from the support level and from the 107.60 or 107.70, we didn't close below that, and now we're trading at 108.90, around that level. We even touched the 109, but we didn't close above that. Is this like can you start seeing that as a positive correction for the euro dollar? Can we retest the levels of 110 or 111 again from the levels where we are?
I mean, the euro basically, after a decline of a couple of weeks, and we went down from 112 to 106, 107.60s. But at the same time, we're holding above 108. Now, currently, but we're back to 109. There is at least some sort of not a demand, but the technical indicators are basically just improving gradually. And I wouldn't be surprised if we see the euro goes back towards 110 or even 111. That is a possibility, especially that the ECB is reluctant to continue with its rate cuts. On the other side, the Federal Reserve is likely to continue. So the market is basically just, especially also with the latest last week, we saw a lot of conflicting data from Germany, France, and Italy. Some are good, some are bad. But in general, markets are actually just waiting what the ECB is going to do. And it's unclear yet how much or how far the ECB will go in the next meeting. But I would say as long as we're above 1.8, that's still a positive sign for the euro, at least on the short term.
Perfect. And what about the dollar yen? We've noticed that dollar yen formed the doji on the daily chart, on the weekly chart. Last week, we almost opened and closed at the same price for the whole week. And now we're trading at 152.20, the levels where we started to create that, let's say, low positivity, and there's no more pressure from the buyers to push the market up after the market went up for at least 5 weeks, consecutive 5 weeks. So could you say that we started the correction from here, especially with the policies of Bank of Japan and in a very short way?
The Bank of Japan did not give us that much, or did not give the market any kind of like clues when the next rate hike will be. That's from one side. Another side, which of course the election outcomes, where the government basically lost the majority, and this is it's going to be very hard for the new prime minister to be able to take any kind of decisions or any policies to be passed in the parliament. So this is basically going to be very tough, and it's going to be also very tricky for dollar yen, at least for the time being. As long as we're above 150, there's no reason for traders to expect any sharp declines in dollar yen. On the other hand, I wouldn't be expecting the Bank of Japan to intervene anytime soon, unless if we see any kind of a sharp increase in dollar yen, maybe towards 160. That is a possibility. Other than that, I think we're going to stay and trade within the range above 150.
Okay, so we're going to wait and see, but we need to be very careful. We say that again because of all the volatility that will happen within this week. For the viewers, if you have any questions, please do not hesitate to contact us at any time. I wish you a happy trading week, and we'll see you next week.